Cool. Hey, what's up, everyone? Sorry for starting late. We're just sorting a few technical things here, but anyway, we're live, we are on, and thank you for tuning in. Everyone who's on YouTube, Facebook, on Zoom, everyone else, thank you for tuning in. Today I'll give you a nice, good breakdown to start your week, help anticipate what you're looking at. And like we always say, it's not signals, just that sharing of knowledge, what we know, how we're analyzing the markets, simplicity over complexity. Okay, trading in itself is complex, but we try and simplify that for you. So that's what I'm trying to say. Apart from that, welcome to today's. I'll share a couple of things before we get into trades. Trading is not all about trading. Trading is all about the ups and downs in psychology, what you're going through psychologically. Glad to say I can see someone saying the mic is not clear. Anyone else having that problem? I'm sorry for that. If it's fine, say like this. If it's not, thumbs down. Someone saying sound not clear. Can everyone else hear? Sound not clear. Okay, one sec. There we go. Can you hear me now? It was unclear sound. It was connected to one of my earphones. No, it's better. Thank you, Cynthia. Let's get on with it. Okay, sorry. Poleni sana. Back on. Okay. Thank you for that, everyone. I see you're all attentive. So like I was saying, welcome to today's analysis. I want to talk a little bit about a couple of things about trading. Trading is all about going through a couple of things psychologically. Personally, psychologically, right now I'm fine. I'm totally good. I had 2 trades last week. I'll talk about them. They all turned into a loss. I had an Aussie dollar. What was it? Aussie dollar long and USD card short. USD card just came for my stop loss like this, hit it, tapped it, then went straight to target and went even further down. Aussie dollar, I was totally wrong on that one. So sometimes when I'm reviewing my trades, so I normally have trades during the week, okay, and then when it gets to midweek, when the week starts, when I get a trade, because I had those trades on Tuesday, then I like looking at the end of the week if how did the trade pan out? Was I wrong on it? Totally wrong on it? Was I right, but my stop loss was hit? This is what I like talking with my students. We normally talk about being right on direction but wrong on timing. You want to be right on those 2 things at the same time. If you're right on direction but wrong on timing, you'll eventually be taken out. That's what happened to me on USD card. My Aussie dollar, I was totally wrong on that one. Those were the only 2 trades I've had this month. I'm normally totally patient waiting for the trades to come into my corner. I never chase that. Apart from that, I'm never forcing any trades to come out every week, every single day. I used to be like that long time. I think I grew up and did away with that. These days I'm really comfortable. I can get 1 trade in a month. That's hopefully not the goal. I like some action sometimes, but I don't go seeking for action. I wait for the action to come to me, and when it comes and presents itself, so I take advantage of that opportunity by risking a certain amount of capital, risking a certain percentage of my total capital, and allocating it on that. I look forward to that. But also, trading in itself is very, very boring. So don't let anyone ever tell you trading is so much fun. Every day's action, it's like going to the club and all that. No. Trading needs you to be patient. But that boringness doesn't actually mean that I'm so bored in trading. No, don't get me wrong. But that boringness means there's no action every single day. That days, even weeks, I can go for 2 weeks without any. Like this month, I had 2 weeks before I got any trade, then finally got them. And they both took me at a loss. So you can get to see how trading is it can give you a headache sometimes. If you're relying on trading every single day to give you the rent at the end of the month, then you're having a hard time. But I won't talk much about that. I'll talk about other few stuffs. I don't want to start a podcast. I'm sure most of you have come for a live technical breakdown. If I start talking more about psychology, I might start another whole 1 hour podcast. But I'm sure most of you can relate. That's why I'm talking about it. Most of you are normally trading at home alone. And I normally get a lot of people coming here and telling me about communities. How can we start a good community in Kenya? Serious community, not just a community where we're talking about shallow stuff, but we are talking about the real stuff, what people are doing, how people are blowing accounts, people are making money. Some people are just there, you're not making, you're not losing, you're just stagnant. All those are levels of a trader, and I'll talk a bit about them part of my presentation as I start. But yeah, that's pretty much it. Apart from that, I hope you guys are having a wonderful week. Hope last week was good. Ken did the analysis last week. I did the previous week, so I'm back to break down the markets. I like breaking down the markets. That's why we do this. For me, it's fun. I look forward to it. I remember the other day I was sharing with my students on Discord, and I remember I shared this long text saying how I love trading, and this is what I had to write. I'm here to remind you. Let me share my screen so that you can just see it. It's part of the our Discord group. I'm sure my students saw it. One sec. I think I've shared the wrong screen. No, here we go. So here it is. So sharing with my students, just look at this. This was on June 22nd. This was at 10 a.m. I'm here to remind you how much I love trading and why I love what I do. Okay. I look forward to the challenge of solving whether the market will go up and down just to make a decision whether to buy and sell. I look forward to back testing my strategy, to see the potential returns my system can generate. I look forward to my psychology sessions with my therapist to know more about my strengths and weaknesses. It is really fascinating, the human mind. I look forward to teaching you guys, to share the knowledge I have been able to gather all these years in trading. I look forward to learning from you as well, and acknowledge that indeed my students are smarter than me, and we are better off growing together rather than alone. Very important point. I look forward to both winning and losing, with the winners giving me the drive and reminder that I will gain financial freedom one day, and my losses to teach me more about myself and the market. I can go on and on, but above all, to all of you, thank you for believing in us to guide you through this journey, and also for you guys who are in this Zoom session. You all found us through different ways, and we are here now talking about the financial markets. How incredible, an awesome time to be alive. We will watch each other grow from scratch to becoming leaders of this continent. We can achieve a lot, my brothers and sisters. We are the pioneers, and this industry depends on us to do what needs to be done in order to get us to where we want to be, the promised land. And with that said, have a wonderful week in the markets. Sign out, CK. And my friends here did that sign. Kudos, okay? Anyway, that was just something short I wanted to share with you guys as well. Before I get into the technical analysis today, let me talk also about a few things. On our YouTube, I just posted this, sharing our story on KTN. So tomorrow at 7:30 p.m., KTN live at 7:30. Go and check that out. We'll be live. It's the show about the entrepreneurship, about entrepreneur. Just listen to a few updated stories of how we started from a bedsitter back in Zimmerman and now all the way here in Lavington. So we share that story, our journey. And most of you already know it, but you can just go and support us and watch it again and share with anyone who you want to inspire, anyone we can inspire. I hope we inspire you. It is I'm humbled if we do, okay? So that's one, okay? Number two, let's get into the charts. Fundamentally, what are we watching this week? So I'm looking at the markets and I'm using Forex Factory. I always use this to look for my news, okay? Some people might wonder when they come here, it's quite, it's not the same as everyone's, okay? So by default, if you press forexfactory.com, it will bring you here. I normally come here just to use the calendar. I don't look for anything else. So I come for calendar, so I click calendar, and then you can see I'm looking for all this red hot news. By default, yours won't be like that. It's because I filtered mine, okay? By default, by default, for everyone, is going to look like this, okay? Like this, so much news, so much data, it's nonsense. I don't pay attention to all this. Most of it is gibberish, so there's no need to follow all that. So what do? Come here, top right, filter, click on it, do away with this orange one, do away with this yellow one. I always leave the red one because the red one is what gives me high impact news, okay? The ones that will strongly affect the markets. I also select a couple. I never deselect or select any of this. I just leave them. Also, these ones I don't deselect and select. I just leave them like that. And then this one here, the gray one, I leave it as well because it's giving me the holidays, okay? So press apply filter, and that's it, okay? So you can see we have one grayish one, which is Italian bank holiday, not a major indicator for me, but what I'm paying attention to is the rest. Now, for most people, they come and start talking. I normally get people calling me, Caleb, are you watching CPI? Are you watching manufacturing index? Are you watching non-farm payrolls, unemployment rate, interest rates, inflation, all those things, this PCE, price index. So just to tell you out front, I never watch all this, okay? I'm just normally looking for a very few. Most of my peers are dollar related, okay? All of them. So I want to be looking for dollar stories, news that are coming out, like Fed Powell speaking. This is important for me. I want to pay attention to that. I'm not really paying attention to things like BOJ. I listen to them, I follow up, okay? But I'm not that deep into them because I don't trade any yen pair. Okay, Ken and Taras do so they pay attention to it. I normally follow British pound. I don't have any pound pair, but I follow it just because it's a major factor in the economy, in the financial world. So I pay attention to it. Also pay attention to the euro, but I normally pay attention to the US dollar news, okay? But then also, I don't come and watch everything. Like I don't follow final GDP quarter to quarter. No, I don't pay attention to that. It's important, yes, but to me, interest rates, inflation, non-farm payrolls, Fed Powell speaking and testifying in Congress, such are my important news. So that's what I'm watching. So with that said, this week, what am I watching? Bank of India, Bailey speaking. We have Fed Powell speaking. Those are things I'm paying attention to. Pretty much it. Okay, Fed Powell speaking here. Okay, 2 days in a row. Those are the main things I'm watching, nothing much. I want to listen to what Powell is saying, the economy, the dollar, where they see it going, the .com plot, the dot plot, okay? Not the .com, sorry about that, the dot plot, what they're talking about, interest rates and all that. So that's what I want to pay attention to. Last week we had some data coming out. GBP removed some news, crazy spikes came out. I was watching that with my students and Ken and Taras. It was quite crazy. I think Ken got an opportunity on pound. I remember it quite well, vividly. It spiked up, hit some level, then shot back down, hit a trend line. We look at it, then it's gone up. Okay, so we look at that today. So that's what I'm looking at fundamentally. Apart from that, what's next? Before I get into the analysis, I like books. I shared this book last week, and many of you came and asked me to share that book with them. I shared it on the Telegram group. I shared on People One-on-One. I don't know if most of you have studied it, but the ones I shared with, this is a very, very good book. I'll still talk about it. It changed the way I look at market. It gave me a deeper understanding about technical analysis, market structure, different trading strategies, okay? The individual self, the trader, okay? It gave me a very big, deep insight about all that. And today, from my notes, I want to share something called here, Chapter 12, Becoming a Trader. Remember, when you're reading books, you don't need to follow it like a textbook. You don't need to go page by page by page. You can skip. You can come and read all about the individual. Like I've read this part 4, all of it, even before I read all these trading strategies, because strategies are all different, okay? So I skipped all here because this one is general. Everyone goes through this. The individual self-directed trader, becoming a trader. Come to Chapter 12, the process. So I read this, trust you me, this thing is beautiful. It's the process of becoming a professional trader. And I normally take notes on Notion, okay? So I normally take notes on Notion, and this is my notes that I do on Notion. These are just personal notes. I've done a lot of notes from the book and many other books, okay? Like I said last week. And a few of you asked me to do how to journal, how to use Notion, how I use it. So I'll do that in time. So you can see I have quite a couple of books. I have a reading calendar. I have trading books. I have psychology and philosophy, life and work, business, biographies. And trust me, these are not even half of the books that I've read, because now I'm trying to digitize it. Most of the notes, I used to write them on my book. When Notion came, I started transferring. I even read most of my books online. I don't have physical ones. So This is the art and science of technical analysis. These are my notes. Becoming a trader, the trader's mind here. No, chapter 12. Click on this, takes me down here. And something just to talk about, most of you that are going through the process of becoming a profitable trader. Okay, it takes time and it takes a lot of grueling period of apprenticeship and on-the-job training. It takes time. Okay, and he says it well. The challenge of becoming a trader are similar in many ways to those faced by doctors, lawyers, engineers, in that a period of education is followed by a grueling period of entrepreneurship and on-the-job training. Okay, need to highlight that. Okay, I won't talk about everything. Just a few steps that he's talked about. He's talked about 1, 2, 3, 4, 5, 6 steps that you need to go to become a profitable trader. The first one is a pre-trader. Everything is new at this stage and everything is difficult. So this is totally normal. Don't ever confuse this part. You're going to go through this. Just like any career, when you start medicine, law, engineering, architecture, any, even the artistic ones, okay, the creative film, music, all that. When you're starting out, it's a bit difficult. But in time, it starts getting better. Now you become a novice in this industry called you a novice trader. This trader is still guaranteed to lose. Okay, so his maxim should be stay small, risk very little. Okay, don't blow your account, because at the end of the day, you already know, most of you already know, when you blow an account, you don't even have an opportunity. So protect your capital. At this stage, traders are not trading to make money. Okay, they are trading for experience and to begin to deal with the emotional challenges of trading. I wish someone could tell me that when I was starting. It's very hard to take in as well, because you're being told you're not trading to make money, but you're trading to get that emotional experience and the feel of the markets, okay? So at this point, introspection and constant journaling. This is important and it's very underrated. Journaling. I'll talk about it a bit. I have how I journal my markets, okay? This is my journal using Notion, and this is my journal for my trades, okay? My day-to-day trades that I normally take. So those are two different journals. I have a market journal and a trade journal, okay? So journaling is very important, okay? It's very critical at this stage. So that's second step. Early competent trader. The first steps towards making money is to stop losing money. So at this stage, you want to start learning how to lose more than you've been losing before. Instead of having that downward curve, downward loss on a graph, you put it time against capital on a graph, it's going down. You want to start making it even, okay, to the downside, not to the upside, to the downside. Okay, so a trader whose wins and losses balance out before commission has taken the first step. Okay, the first step has taken the first step to competence. So you're getting somewhere. Okay, more hard work is needed. So that's not where the job ends. Okay, the next thing, you become a competent trader. At this stage, the first stage of real competence is achieved when the trader is able to cover transaction costs with trading profits. Now, I never used to understand this point, especially if you're trading a small account. It's hard to understand this point. If you start trading a bigger account, you start understanding how hard it is. Okay, like you start paying attention to spread, leverage, margin, the risks you're taking per trade. So because you start noticing that charges can be a lot, commissions, swap. I remember Taras, on his $25,000 account, this is with respect to him, he's going to update you guys, but there's a trade that he took that instead of losing 1%, because of the swaps and all that, it adds it up to about 1.5%, and that adds up, okay? So those are important things to pay attention to. Transactional costs with trading can kill a trader. It can pull out from your profits a lot of it, okay? Because I remember him just holding an account, a trade for about 2 days, okay? The charge on it, he was charged a swap of about $50-something. So imagine, just holding a trade, that's not even profit, just constant loss. If he continued holding it much longer, he would have charged about $100. If 2 days it was $50, imagine what a whole week can be. So those are very important aspects to pay attention to. So most traders find that they begin to develop emotional balance and control as well. Okay, the trader will have established a routine for market review, execution, and trade review. Sort of what I've talked about. Okay, like this. There's a routine. There's something. It's full-time job. It's just like going to 9 to 5. You have a routine. You wake up at this time. You need to be at work at this time. You do this certain amount of tasks and work before a certain time. And then the day ends, then call it a day. So same thing with trading, okay? Now that's competency. Now you start becoming a proficient trader, okay? Here, the trader starts making money, okay? Errors and mistakes are far less frequent, but when they do happen, they're corrected and reviewed, and the lessons are quickly assimilated, okay? That's a proficient trader. And last but not least, because I don't take too much time here, you finally become an experienced trader. It is difficult to imagine a trader becoming a true veteran without living through a complete bull and bear market cycle, about a decade. Okay, in most cases. So this is someone who's done research and is telling you it takes about a decade to become really good. This trader has finally seen it all and has also become cognizant of the unknown and unknowable risks that accompany all market activity. If time allows, and towards the end, if any one of you can remind me, allow me to show you about some guy we've been tracking on my FX book called Lux for the past almost 3 years now. We've been tracking him ever since we found him. And trust you me, this guy has been able to grow his account from $2,000 to $11 million. Most of my students know him. I've talked about him a lot. Those are the people we're looking up to. At the end of the day, it's all about a track record, not about the car you buy, the houses you're living in, what you can buy for yourself, how you can go out on a daily basis. No. At the end of the day, we want to look, how are you performing? What is your track record? Are we making money? Are we losing money? And trust you me, it is not bad to be losing money. It's a normal stage. So just because you're losing money doesn't mean you're not moving towards a certain goal. You're actually getting closer to it. You're much better than someone who's just critiquing and looking at people. So at the end of the day, put your money where your mouth is. So this is just my market narrative. I'll do a video on this. Most of you have been asking me. I know it's taken quite some time, but I'll do it, okay? Work here has been busy and all, but I will do it. I look forward to doing one. Like I remember when we talked about June, week 24, you do a breakdown of your markets, just journaling your markets. Now remember, this is not trade journaling. This is market narrative, market journaling. What is the story the market is telling you? Remember, we all look at the markets differently. So we're all taking in the same information, what you're seeing, but we're all processing it differently with respect to our trading strategy, with respect to our character, our behavior, our temperaments, our own understanding of the markets and ourselves. So it's all personal, okay? So this is how I do my journaling. I normally have a gold, like this was gold. I think I did this on a Monday. I did a bit of a recap on Wednesday. I was looking at this triangle. Then end of the week review, okay? That's what I do. Then Dow Jones, same thing. Wednesday, midweek, then end of the week. Aussie dollar, midweek on Wednesday, end of the week. And USD card, start of the week, midweek, and end of the week. Then dollar index as well. I like to cover all that. So that's how I journal. This is just basically observation. Nothing special about this. It's just screenshot observation. It helps me be consistent. It helps me be disciplined. It helps me stay up to date. Like I can easily remember what happened in the markets 2 weeks ago, 3 weeks ago with total vividly. Okay. So that's on that. This is my trade journal. As you can see, I'm normally looking at on a month-to-month basis, the number of trades I've taken, how I've performed on them. Like if you look at June, so far I've only had these 2 trades that I was talking about. I won't get into this because this is what you teach in the course. I won't jump into that. A year-to-date trade report, weekly risk and P&L report, lessons that I've learned, etc. So that's what I do. I don't get inside them because it has proprietary stuff. My boys won't allow me to show you that as much as I'd love to. We do that with our students. So apart from that, I've taken the last 20 minutes just talking about markets. Now let's look at what the market has to give us technically. Remember, something I always like saying, the market narrative normally depends on your perspective, your analysis, your point of view. This is GBP USD. I remember this trade is when we were looking at, what is it called? When the news came out last week. And something I can talk about this before I go into any other market. when the market is approaching a previous high, okay, and I like saying this a lot, okay, so you can write it down, take it down as notes. What is of importance is not when a market reaches a certain level, but how it approaches that level, okay? So as a market is approaching a key level and you start seeing reducing momentum, okay? Like when a market is approaching a key level, an indicator that shows that this key level might not hold is when market is approaching it with a lot of momentum, like it's coming to break. It's strong momentum, like here. You're seeing this strong momentum breaking that key level, going all the way up. But when you see here in this case, okay, this case scenario, something that can give you a good trade idea is when market is approaching this previous high, when you're anticipating, when you normally read books, you're reading a double top, double bottom. Now, how I approach my double tops and double bottom is by watching and observing the momentum as market is approaching that level, okay? So you can see here, market was approaching this level, it impulsed, it tried here at first. So it went up, then finally created one last low, then tried to push up, came back down, pushed back up, rejected that, and immediately started rejecting. Now, this was a very fast move last week because it was time for news. It was when pound increased their interest rates by 50 basis points. Most people were expecting a 25 basis points, and it just shot all the way up. So we can see that market was shooting up, then we got a correction. For market starts moving down. So that was an indication. I'll show you much others as I'm analyzing the markets, how market is always approaching a key level with reduced momentum and vice versa. Sometimes it's approaching with increased momentum. And when market is doing that, you don't want to be quick to sell or to buy, depending on the direction market is moving. For example, look at the opposite. Let's do away with this. Look how market is approaching this previous key level. Okay, much better seen on the 4 hour. This is the 1 hour. That's where my market was. Look at how market is coming with reduced momentum. Why? Because of two things. There's a trend line here and there's a key level. So you want to pay attention to those 2 points, okay? And if I adjust this, let me take this, let me keep this on the 4 hour. I want with respect to the 1 hour here. Now watch this, look at this. Look at that key level, beautiful, okay? Look at that. That's a resistance. Look how market broke that level, what we call a breakout and a successful follow through. What is a successful follow through? What market does after it breaks a certain key level. This was a successful follow through in that market continued moving in that direction of the trend and remained in that direction. We haven't gone below this level. Now, look at this point. So I'm always paying attention to market structure and price action. Price action is dynamic, market structure is static. Market structure is in the past, price action is in the present. I've said that quite fast, I hope it makes sense, okay? So let me repeat. Price action is dynamic, market structure is static. Price action is the present, market structure is in the past. What is of more importance? Both of them are very important, but it's most important to pay attention to price action because it's giving you what's present. It's what will give you that idea whether to buy and sell. Market structure is in the past. It's good for analyzing and seeing what people did in the previous time. But market price action, what is happening live, that is what is of importance at any given time, okay? So look at this level. So we're just breaking down key levels, support and resistance. This was a resistance, broken, and support. Market rejected here, came up, rejected. Now look at how this level is dangling around. Market is unable to break below this level. If you go to the 4 hour chart, you can see that this is a trend line. So if you zoom out, you can see that this is quite a trend line where market is sort of respecting, okay? So you can see how that's what we call a confluence, where you have different aspects meeting at the same point, okay? And giving that solid sort of support level at that point. So that's what I'm watching on GBP USD. I don't trade this pair, but that doesn't mean I don't analyze it, okay? Market has been in a strong bullish trend for the longest time. Okay, ever since we bottomed down here. This was back in September 2022. Okay, a much steeper trend line can be drawn from this level, something like that. Okay, sometimes I like taking a mean. Now, drawing a trend line sometimes is very subjective. So I'm sure some people might be asking, how is he drawing it? Why are you not using the below wick? Like I said, markets are very dynamic. There's no one-way rule of approaching the market. Sometimes you'll use the wicks, they'll work. Sometimes you'll use them, they don't work. Sometimes you use the body, they work. Sometimes they don't work. So it's very subjective. You just get a line of preference that is best for you, okay? And that needs experience. It just needs experience, a lot of that. So this is what I'm watching on GBP USD. It's still very bullish. Look at a daily chart. If you do a top-down analysis, you can see how market has just been respecting the upside. Look at this. This is a key resistance level. You can see how market broke strongly to the lower side, rejected it once, then rejected it twice, went to the downside. Market went all that to that low, started coming back up, rejected it yet again, signifying that it's a very important level, okay? Markets came back down, then finally we came and broke above it. The fact that we took so much time before we broke above it, I don't think market will easily just come and break back below it. You can see how market is going back down, correcting. The impulses are to the upside. Look at this correction. It's coming with reduced momentum. And that's what I'm saying. Pay attention to price action. What's price action telling you on a day-to-day basis, hour-to-hour basis, okay? So on a top-down analysis on the daily chart, this looks quite bullish. Market is coming to respect our support, okay? If I come to the 4-hour chart, it's the same thing you're seeing. Okay, we have the bigger trend line, this one that I drew. Okay, then we have this inner trend line that you want to pay attention to. That market is sort of trying to resist or get support from at this level. Okay, if I come to the 1-hour chart, that's the level we're watching. I've drawn for you my resistance. Support level, resistance and support, and that's what we're watching. Market is in a very bullish phase and can easily shoot up from any time. That does not mean I'm not paying attention to the downside. The downside will only come if the opposite of what I've talked about happens. If market strongly breaks below, just like it broke above here, then you change narrative. That's it. Market needs you to be that quick. Be quick to change perspective. So this is what Peter Brandt says. So Peter Brandt is a market wizard. Strong opinions weakly held, okay? So be very strong and confident on your opinion, such that you believe in yourself and you believe in your system and you believe that you are doing the right thing when you're approaching the markets. But be very quick to change, okay, when facts change. Okay? When the facts change, be very quick to change. And that's what I'm saying here. If market strongly breaks to the downside, someone else might be saying, Caleb said this is a very strong uptrend. We're looking for markets to go up. Trust you, my friend, I'll be very strongly bearish. Okay, it can easily. That's why we are traders. You're trading. You're also trading ideas, and you're accepting when you're right, when you're wrong, and quickly changing sides. That doesn't mean just be in, out, buy, sell, buy, sell. No, there's a certain approach to that. There are certain rules that my students know that I use to know when market has changed direction and all that. So those are things I'm looking at. I'm just doing it very fast because of the experience we have. Apart from that, that's what I'm watching on this one. So watch for bullish trends. This is a very strong trend. Market is holding, okay? I'm looking still for dollar weaknesses. So if this can hold, I'm looking for markets to continue moving to the upside on Great British Pound, okay? I think that's quite a solid analysis. If you look at Euro USD, markets last week did a lot of ups and downs. Yeah? And in my movie. So if I go to the daily chart, a few of you might have caught what I just said, but I like to joke. So this is Euro USD daily chart, okay? So I'm always doing a top-down analysis. That's a rule. That's something that I always have to do. I always look at markets from a top-down analysis, how are markets behaving. And you can see here, more or less, for the longest, market has been in a sideways movement. You have not really created a significant high or a significant low to the downside, okay? So when I'm analyzing the markets, I'm normally trying to draw certain patterns. What can the market be telling me? Are we forming a consolidation? Are we in a triangle? Are we in a wedge? Okay. So these are things I'm normally looking at. Okay. So this is a pattern I'm looking at. Markets can easily, this is like a wedge forming on the upside. Still looking more bullish than it is bearish because of the strong impulses we've been having. Market has still been creating new highs, like you can see here. See this level, this resistance, market broke above it, created a new high, and now sort of market is dangling around this point, okay? Might form what we call a head and shoulder. Like I said last time, I'm not big on head and shoulder patterns. They rarely work, they rarely come for me, okay? That's also very opinionated. It's not a fact, and I like to say it outright. That's my own opinion. But this can be one, okay? So you're looking at this previous resistance and this sort of resistance that is happening at the moment. But you also want to do a top-down analysis to look at what is happening. That's the daily chart giving us a resistance there, okay? Now I want to go down to the 4-hour chart just to look at different things the market is telling me. What are we doing? Okay, so you can see we got resistance. Let me keep these drawings back on the daily. I don't want them here. There we go. So I'm looking at the patterns here. Market is trying to form a trend line. Still not a clear trend line. I'm not a big fan of such trend lines. It's not so clear to me. Okay. Just let me rewind a bit, just to show you, just to emphasize on the point I was saying, how market created a double top at this point. Like I said, what did I say? How markets always pay attention to how market is approaching the previous high. If it's coming like this, look at this one. This was a very good indication that market might move to the downside. Okay, not certain. There's no certainty in the market. Might. It was a probable move. Not because we are seeing it now, it must have happened. It could have happened differently. But since the market was going up with reduced momentum, it was showing that momentum was fading to the upside. It wasn't really sustaining it. And look at that strong trend that market created to the downside. Okay. That was just to emphasize on that point. We won't talk about it again. Okay. So now I'm just paying attention here. Euro USD. I don't trade this pair. Most people are a big fan of these pairs because it has low spreads. It's the most traded pair. I don't like doing what most people are doing, so I just don't trade this pair because of that reason. Okay, I don't have any specific reason why I don't trade Euro USD, but that's my main reason why I don't trade it. It's just opinionated. It's my own personal approach. Many people are trading it. I don't want to be on the side where many people are. I want to be quite trade your own path, take your own trades, pair and your own pairs. So nothing much on this one. 4 hour, I don't see anything much. I don't see any pattern. This was just an impulsive move to the upside. A strong correction came. Okay, so I don't have any. There's no pattern for me here. So basically, no pattern, no trade, nothing. Okay. The last pattern I had was here, and that was that. Over here, I'm not seeing anything significant. So allow me to pass that for now, and let me get into my main pairs that I trade, okay? Let's start with the dollar index. Dollar index has been in a bearish trend for quite the longest, okay? If you've been paying attention, market started a bear market back in September, okay? You can see, how do you know that a market is in a downtrend? The most basic thing is that market is forming lower lows and lower highs on a bigger perspective. I don't go to the 1 hour chart and start looking for higher highs, higher lows. No. I look for the higher highs and higher lows on a daily chart, 4 hour. That's the perspective I'm looking for. So you can see here, market is quite in a downtrend, okay? But now that is the long term. We are paying attention to here. Something of significance is that market hasn't broken below this point for the longest, okay? So it can almost, if I just take this out for now, okay? Let's pay attention here. Let's zoom in here. You can see the market is sort of forming what we call a descending triangle, okay? Where market is rejecting this support. Let's draw it quite well, yeah. So market came down, rejected, came up, came, rejected, came up, and sort of we're pushing back down towards it, okay? So we're sort of having that descending triangle. I don't trade triangles in that because market has been moving down, it's just going to move down, okay? Reason being, when you're looking at consolidation such as triangles, rectangles, this descending, ascending triangles, market has a different perspective there. What do I mean? When market is in a consolidation, be it that triangle or a rectangle, is that market is sort of in an indecision phase. So the big players are sort of at equilibrium. That's why the buyers and the sellers are more or less of equal strength. That's why we're not going to a new high, to a new low. When market goes to a new high, it's because there's an imbalance between the buyers and the sellers, okay? What imbalance is that? Is that the buyers have more pressure than the sellers, okay? That's the imbalance. When market is in a downtrend, we have an imbalance between the sellers and the buyers, in that the sellers have more pressure than the buyers, and that's why market moves down. But when market is moving sideways, there's a balance between the buyers and the sellers. I hope I've explained that quite correctly. There's a balance, and that's what's happening here. So when there's a balance, I don't like trying to predict what will happen after the balance, okay? I might try and predict, and luckily I might be right and clap for myself and go start saying, yes, I said it will go down and up. But market is not about proving yourself right. Market is about making money, Okay, so no one cares if you're right, no one cares if you're wrong. People care whether you made or you lost money. If you made money, they'll be like, you're good at it. If you lost money, you're still told to pull up your socks, even if you traded following your rules. It is what it is. Okay, but the thing is here, look at this. This is a sideways movement. I'm looking to see where market is going to go next. Right now, I'm looking at this short term. If I zoom in, okay, come here. The bigger picture is giving me a downtrend. If I zoom in here, market is more of a downtrend than it is a bull trend. And if I go down to the 4-hour chart, I can see it much more clearer here. We sort of have a trend line to the downside, okay? Markets is just breaking the supports to the downside and respecting them, okay? You can see here support, market just broke it, market broke this one, okay? And now we're sort of breaking it to the downside again, respecting the trend line. And that's what I'm saying. To me, markets are more in a bearish phase than it is in a bullish phase. And that's what I'm watching. That's why I'm saying I'm looking for GBP to go up. Euro USD can also potentially go up. Those are wild guesses on that Euro USD because I've not done a deep analysis on it. And this one also, I'm looking for it to continue on a downtrend with respect to the long-term analysis. Okay, that's it. With that said, that's the dollar. So I've looked at the dollar. Now let's look at the dollar pairs, the pairs that I trade. Let's start with USD CAD, one of my most favorite pair. I took a trade last week. I'll show you the trade that I had and lost on it. So on this one, just look at this step-by-step process. I was very, very bearish. I was looking at markets to continue moving down, and that's what actually happened. Now I came down to the 4-hour chart to break down the markets. Okay, so when I came to the 1-hour chart, so here's my trade setup. So I was looking for this. I want to break it down and say exactly what strategy I was using, but I was looking for a bearish trade. Now I was looking for markets to come and reject here. So let's zoom in. Let me show you how I had this trade. It's also good for me to retrospect it and how it went. So I was looking for markets here. It was a strong impulse to the downside. I was looking for a correction back to this sort of resistance level, okay? At this point, immediately market tapped this point, I was on a very strong bearish sell, okay? Market was selling, I'd already entered. That's why I have my risk reward tool over here. Remember, I got a very good entry even before the candlestick closed. I had a good risk reward of about 1:3, if I remember it well. It was a very good risk reward. I had something of this sort. I remember my stop loss was at 1.3250. This was in line with my students as well. One of some students who also had this. It was a very good setup, okay? Now, what happened in the markets? This was telling you earlier on. Right on direction, wrong on timing, okay? And this happens, and that doesn't mean it's a bad thing, okay? It's just that it happens sometimes. I got a very good entry. Markets shot further up. I was spiked out. I never fight to the market, so you'll never hear me saying, I'm getting back in. I was right on this one. Let me just get my trade. I've done that a million times. One, you're not psychologically fine. You're already back in it to revenge trade. So I tend to avoid such. Even if it worked, I won't start beating myself up and start saying, I wish I took that trade. No. This just spiked me up. It's normal. Came out, took that loss, took that L. Market moved to my direction. I was totally right on the direction, but was very wrong on timing, which still renders you wrong because you lost money. Okay, so that's what happened on this one. Okay, so if I do away with this one, I'd kept that so that I can share with you guys and just show you what's up. But if I do away with it now, if I go and look at a new fresh analysis, market has still been in a downtrend. But we might respect this channel-like formation that market has been forming to the downside. Okay, might come and respect where market is at the moment. Okay, and get some support here. Okay, market can get some support. Reject this level. I'm looking at key levels. So this is something I'm doing live with you guys. I hadn't done a deep analysis on this pair. So if I take here, we're looking at this support level. Okay, so I'm looking here. I normally look left, structure leads clues. That's a rule. A rule we found a long time ago when we were starting out. Look left, structure leads clues. Basically what that means is look left for turning points, swing points, levels, pivotal points, market's way to stunning. Okay, that's a resistance level. And if I extrapolate that here, you can get to see that market is at a strong pivotal point, okay, where market might, for a short term, change direction after getting this strong downward bearish momentum to the downside, okay? That doesn't mean anything. Sometimes people normally come and say, market has been moving down for a long time, it needs to start moving up. That might be the case, or it might also not be the case. Markets can stay irrational for a very long time without going back to sanity. Okay, so but what I'm looking at, if market is able to hold this level, that's my contingency plan one. Okay, sorry, I need to go to the 4 hour. I look to see if market can hold that level. You can see this level where market is at. We might get maybe a double bottom. Okay, rejection at this point, because that's the point market is refusing to break down below. You can see the 4 hours have been rejecting once, twice, 3 times, not breaking below it. Now, if you go down to the 1 hour chart, that's how I approach the markets. I'm looking for key levels. You can see how market has been rejecting this level. Now, 2 things can happen: a strong rejection moving up, showing that the market has strongly rejected that point, or a strong breakout to the downside. And I always look for that. That's why I'm telling you, price action is key. If market strongly breaks below this, then I'm looking for more bears than I am looking for bullish, okay? But if market rejects it as well, then markets can also be in a strong bullish momentum. Another thing to pay attention to, those are 2 scenarios, but those 2 scenarios can even be more complex, okay? Sometimes markets can strongly break below, but I won't be quick to even look for bearish trends, okay? What can happen is what we call, what I personally called a failed follow through. Market strongly breaks below. 2 things happen. It hunts for stop losses. People who have put the stop loss here, buyers, takes them out. So that's 1. 2, it can come and fake out the sellers. Most people will start selling, okay? It's broken, it's closed below. Then you're quick. The first thing you start doing is what? Sell, sell, sell. Guys, we've broken below support. Market has closed below. But remember, markets are always a trap. You need to understand and look at how markets read in between the lines. So a strong close below doesn't necessarily mean, okay? So you'll never hear me any day saying, like, I'm fixed. Once market strongly breaks out, I'm bearish. If it doesn't, I'm bullish. No. Look at the whole scenario. Paint the picture. Have scenarios in your head. Contingency plan. If this happens, plan A, what's plan B? What's plan C? Have all that. So I hope you're getting me. I hope we're following one another. I'm just trying to break down the markets using pure price action. I'm not even talking about any indicator, just observing the market. So over here, what I'm just basically observing is a lot of rejection of these points, buyers and sellers. Remember, equilibrium. That's why we're not going up. That's why we're not going up, down. Okay, so we wait for that information and see what happens. So that's what I'm watching on US Aussie dollar. Had that loss last week, took that L, lost that 1%. Am I mad at the markets? No. Am I acting like a victim to the markets? No. I'm very neutral. The markets is just like life. When life hits you bad, it's not that life is against you. It's just that it's just not a good time, and it's normal. Okay, so that's what I'm watching on USD CAD. I hope that makes sense. I hope you've enjoyed that one. Aussie dollar. Same thing. Now, there's been quite a disparity between Aussie dollar and USD CAD. Now, usually when Aussie dollar is USD CAD is moving in a downtrend, I'm expecting Aussie dollar to move in an uptrend. Not necessarily. They're not correlated. No. The only thing I'm saying that is because USD CAD, US dollar is acting as the base currency. On Aussie dollar, it's acting as the quote currency. So theoretically, they need to be moving in opposite directions at any one time. But like I said, markets are not perfect. They always do different things at different times. For example, look at this bearish trend. Market has been in a bearish trend here. And if I go back to USD CAD, it's been in a bearish trend, okay? So whenever such is happening, you'll find that USD CAD has sort of moved away. The one that has actually moved away is more of Aussie dollar, okay? Because most pairs have been moving up. If you look at GBP USD, yes, we've been having corrections, but they've been moving quite substantially to the upside, okay? More than it has to the downside, okay? But USD CAD moving to the downside with respect to dollar index, okay? Dollar index, USD CAD, both been moving down, okay? In a big picture. Leave the short term in a big picture narrative. So they tend to move more or less in one another. But sometimes when I see this disparity, when I'm seeing this USD CAD moving down more strongly than it is in any other pair, then I immediately want to go look at US oil. So US oil is a commodity pair. USD CAD is a commodity pair, okay? So it's highly correlated with US oil. Okay, so if I go to US oil and look at it, it's strong to find that market has been getting these spikes to the upside. Okay, and that's what I'm looking at. I don't trade oil, but I just look at it for a different narrative. Okay, just to get a perspective. What's the dollar doing? Why is it moving in opposite direction with the others? Okay, and that's what I get. So USD CAD, very important. Canada is one of the main leading oil producers in the world. Okay, so that's why Canadian dollar is a commodity pair with respect to oil. Okay, so I was back on USD CAD, Aussie dollar. I've already talked about USD CAD. Aussie dollar, big picture. Look at this. Markets strongly moved. Actually, let's go here. Strongly moved down, strongly moved back up, strongly moved back down. Markets have been quite hot. Okay, I remember I said I also had a trade on this one. Now, what was I watching on this one last week? So what I was watching on this one, market had a very good uptrend. So I'm normally looking for what we call an impulse. I look for correction, and then I anticipate an impulse and prepare and enter that impulse. So I'd taken here, market had come back to, it had broken above this resistance level, okay? So it's looking for markets to come here and take this support level, okay? If I go down to the 4-hour chart, I was looking for a support level around here, okay? Around this level to anticipate market to move up. Had a very good buy, okay? But market instead did the opposite and ended up moving further to the downside. I took an L on this one. Now this one, unlike USD CAD, which was actually wrong on timing but right on direction, now this one was totally wrong on timing because market is still moving down. I'd bought it, accept it. It's good I didn't fight with this market. Now imagine if I fought with this market, I would have totally taken L's on L's on L's, okay? So this one, market has moved to the downside. Now, at the moment I'm watching this channel, you can see over here, market just moving sideways. Nothing much has happened today, okay? Just watching to see what market will do later on. You can get a spike, maybe come get a third trend line bounce, start moving to the downside. Markets can just also move to the downside, okay? So it's just a perspective. Any side can happen. I'm just waiting to anticipate and see what the market will give me at the end of the day. So nothing much on this one this week. And like last week when I had a trade this week, no trades. Most of my trade setups actually build up as the week goes on. So I'm normally paying keen attention, analyzing, drawing my patterns, using certain key levels that I'm watching to anticipate, okay? So that's what I'm normally watching. I'm using more price action at any given time. So Aussie dollar as well, no trade setup. So I hope you're learning something from me. What I'm mainly saying is that not all the time you can have a trade setup. Sometimes you're just there, you're just watching. And then all of a sudden, sometimes it will just come, then you have trades back to back. It's not over trading. Someone might say you're over trading, but you're really not. It's just you're having trades coming back to back, okay? So if I look at gold, let's zoom out. So like I always do, daily picture, big picture perspective. I was looking for markets. Markets have been in an uptrend here. You can see higher highs, higher low, higher high, higher low, higher high, higher low over here. Okay. If I zoom in to see what's happening here, markets were in a sideways movement for a long time. I remember I shared with my students. Market was forming a triangle here. Okay. It had impulse to the downside, triangle, then now it's broken to the downside. You're looking at this key level. Market has been unable to continue shooting strongly above the 1930, 1940, 1950 level, okay? So markets have acted as a strong support here. And now, eventually last week we broke below. Now look at this. Let's look at price action, okay? Look at this. Market rejected once, okay? It rejected twice, okay? It's created a very strong bullish. This is a very strong bullish candlestick. But market couldn't sustain that. What happened instead? Markets came down, broke below this key level, okay? We are below the 1825 level. Right now, 1925. Market is currently trading below 1950, which is a key level. And now we are below here. Now look how market had a strong close below, okay? Didn't get an immediate successful follow through. Market went back to reject this level. More or less what we normally call going back to take to a liquidity level. Okay, so normally you want to see market going back to liquidity before getting any other direction. So it's sort of like a breakout retest. That's what people normally call it. It's a breakout retest. To me, it's a breakout. Market's going back to liquidity to get liquidity, and then finally pushing in that direction of the that market is finally moving to. So that's what I'm paying attention to. On a daily chart perspective, markets has rejected here. Now if I go down to the 4-hour, you can see the market does not have a lot of momentum to the downside. Now remember, I'm normally looking for strong impulsive movements in the direction the market is moving to. Now this one doesn't have really strong impulsive. It is impulsive, but it's not as strong. What do I mean? Look at here. When market was creating this new low, it wasn't strong. It was like creating a new low, then correcting. Creating a new low, immediately starting to correct. Here, market spiked to a new low, started correcting. Right now, same thing. So when I'm looking at such, I'm not seeing that strong momentum that I need to see when we're in a downtrend. When you're in a downtrend, you want to see strong momentums like this. You see this strong, you see this strong. That's a strong downward momentum. But when you're seeing markets playing like this, be very wary. It can be a trap that is building up, and many people are securing their short positions just to be surprised markets just strongly shooting to the upside. Okay, so that's what I'm watching. I'm watching this channel-like formation. If market can be able to stay below this level, trend line, below these key levels, then the trend line to the downside can be sustained, okay? If not, markets can strongly break above, and that can strongly change the direction of the trend to continue moving to the upside. Because if you look at the daily chart, I'm more bullish than I am bearish, okay? On a big picture perspective, look at this. Big picture perspective, markets have been creating a higher low for me, so that's what I'm anticipating moving forward. Something else, I can take this trend line. This is just also a perspective. I'll be watching here, okay? I wanted to draw that with you guys. I had it over the weekend, taking this as my starting point, because what you normally go doing, why did I take this? Why did I leave this? Someone might ask that. Very good question. So if I draw this level and I use this as a turning point, I need to come to somewhere here, okay? That's what I had before. Market came, rejected it, broke below. When it breaks below, doesn't necessarily mean we have changed direction because a trend line has been broken, okay? The markets are still respecting the formation of higher highs, higher lows. So I look and adjust my trend line, okay? So I come and look for the next previous higher low, because this was a higher high, higher low. I use that as a starting point, use this next higher low as a turning point, and extrapolate like this. So as much as market is trying to stay below, I'm watching at these two levels. Market can come reject this level and start pushing to the upside. That's also a scenario. So look at that. Never look at market with a one eye. Always look at two sides of the story. Try and weigh both options, the buyers and the sellers. What are different? Because the market has those two people. There's a buyers and sellers, and the market will do two things at the end of the day. It will go up or it will go down. So you want to don't be surprised when something happens. Don't be like, oh, why is markets going down? I didn't see that happening. For me, I try and look for the reasons why I won't always find an answer, okay? So don't get me wrong as well. But when I do get it, I won't be surprised. I won't be surprised when market will just come. To someone else, they don't have that trend line. So market can come and just bounce off here and start moving up. Then be like, whoa, what's going on? But in hindsight, if you come and look at it later on, you'll be like, oh, there's a trend line here. So these days, instead of realizing that late, I try and anticipate that. I try and look for different scenarios, different things that are paying out. And that's why I trade very few pairs, because less is more. And then I go deep into those pairs. I can look at different scenarios, different plans, different analysis on them, okay? So that's what I'm watching on this one, on gold. No trade much on this one. I'll be anticipating. I'm sure by Wednesday, Thursday, the market will have built up a story that I'll be looking. Maybe I'll have had a trade or not, okay? So that's what I'm paying attention to on this one. And last but not least, where I will close my analysis for the day is on Dow Jones. Dow Jones, strongly bullish. Market has been forming very good, beautiful flags to the upside. Okay, so I've been paying attention to those ones. If I draw a trend line, what we're paying attention to now is here at this point, okay? So this is where we are, okay? Sometimes someone can extrapolate it, maybe take a deeper trend line, okay? It just depends how much you're zooming out. If you're just here, you can use that as a starting point. If you're zooming out, use down there as a starting point. To me, I prefer this downward point because it's the significant level where market turned as it was moving in a downtrend, okay? That's the point. That's the lowest low we got in that downtrend. Now we're sort of moving in an uptrend, and that's the level I'm looking at. Now, market has been rejecting a major level here. Let me draw it for you around this point here, okay? So that's around the 34,500 level. So market on this one, this is a pattern. I'm sure most of you have already seen which pattern that is. Just like the one we saw, what was it? Was it on Aussie dollar? Or no, it was on the dollar. Yeah, the dollar is forming a descending triangle. Now this is an ascending triangle. Now this is what I'm paying attention to. I want to see what can market be able to break above this level or below. Now those two will be of most significance to me. Right now I'm sort of hanging in between the two. I'm not really significant on any. And this happens a lot. I'm sure some of you might be wondering, why is Caleb just saying no trade setup, no pattern? For me, there's no pattern, there's nothing. So these are the tears of sitting off. Does sitting off means you're not trading? No. Sitting out of the market is actually the time you need to pay most of the attention, okay? Because it's just like any other sport. Look at Messi, look at Ronaldo. Practice is where that's when people are not even watching. People are not even looking. No one is paying attention to what Ronaldo is doing before the game. But when the game time comes is when everyone is watching. Okay, and when it's game time, it's not a matter of hesitating, not a matter of thinking, it's a matter of execution. So for me, my practice, when I'm in the gym, my gym session in the markets is when I have nothing to do, and that's the time I'm paying most of attention. That's where I'm learning about myself, my patience, my system. Is it working? I'm back testing. And when the market trade setup comes, it's a matter of execution. It's a matter of just buy, sell. There's nothing else you're going to do. There's no other option. There's only those two options. But that two options takes a lot of time, a lot of analysis, a lot of preparation, mental rehearsal, okay, preparing my risk management parameter. How much am I going to risk? Where's my stop loss? All that. It's an ongoing process that never stops. Okay, some people normally think the action is when the market is taking the trade. When I take a trade and let's say I make a profit of $1,000, $2,000, that's not because I took that trade and it worked in my favor. That's because of the hard work that I was doing behind the scenes, behind the curtains, okay? Let me not make this into a pep talk. Let's continue analyzing. I just like saying it as it is. It's good to be honest. These days, I like being honest. When I lose money, I've lost money here. If I make, okay, I've made, but there's still a lot of work to be done. Just because you made money today, and most of you have gone through this, it doesn't mean you'll be consistently profitable, okay? Trading is hard every single day. That never changes, okay? So looking here, let's go back here. Market still here dangling. Market had this impulse. We're within this correction, which is still within this impulsive phase. If I go down to the 4-hour chart, I'm just looking at the patterns market is making. We've sort of had a trend line that market is sort of forming to the downside. It's not so significant, but it's quite here. It's not a significant counter trend line. If you draw it like this, it's just something. Okay, because it doesn't have many turning points. It's just not clear. There are no many higher highs, higher lows. It's just there. Okay, so this is what I'm watching. Let's see how market can come. Respect. I'm looking for this key level. I'm looking for the trend line. Let's see if market can get to the trend line. At the same time, I'm looking for these key levels. Okay, let's see here. A market came and turned before, got a swing low before created a new high. So I'm waiting to see where market will do at this point. If not, and breaks below, I'll be looking for this trend line. Simple, nothing complicated, straight to the point. Basically, that's it, okay? That's what I'm watching. Those are my pairs, and that's what I'm anticipating for the week. I hope I've given you an analysis of how to approach. Let me just look at maybe one yen pair, USD JPY. Why is it loading? I'll give it time. Yeah, so I normally scan the other markets just to see what's happening. I was quite bearish on this pair. I thought it will actually move down. But you can see what happens. Market actually moved up. So we had a triangle formation here. Market's impulse consolidated, broke to the upside. I had sort of this pattern here. I was looking for this channel. It's sort of more of a channel, okay, in a big picture perspective. Market had come. Let's expand this and put it full. Market had started down here. Okay, you can see how it started nicely, touched here, touched down here, came shy of that level. So at this point, I was expecting markets to move back down. But lo and behold, those are the markets. You can see markets still moving up. Yen has been weakening against the dollar. The dollar has just been gaining and gaining. I think it's the same case with euro yen and pound yen. I'm not sure. Let's look at it. But I believe so. Most of the times, the yen pairs are more or less doing the same thing at the same time. If yen is weakening on here, exactly same thing. So these are the points. Look at this. This is when you're trading contrarian type of analysis. Markets just keep going and going. If you're looking here to do some contrarian type of trading, you're saying markets, so I'm sure some of you are using RSI, stochastics, MACD, maybe those divergences, parabolic, SAR, those things that I normally tell you that markets are overbought, oversold. I threw those things away a long time ago because I used to look for overbought and oversold, and markets in an overbought scenario just continued being overbought, and in an oversold scenario just continued being oversold. So I stopped doing it. Look at this pair. Look, it's come all the way from here. Someone over here would have said this is overbought. Yes, it corrected, but look, it just continued going. So that's pretty much it. Let me not talk much about a pair that I don't even pay attention to and destroy your analysis that you've done for yourself. Do your own analysis. I hope my analysis has helped my perspective. I wanted to share that. And I think that's pretty much solid. At the end of the day, I like sitting down and reading. Like right now, this week, I'm reading about this. You can go check it out. Velocity of money, the definitions. I read about it some time back. This guy called Mike Maloney. I love that guy. I've been following him for the longest. on YouTube. I've also read his books. He has this book called Gold and Silver. We've talked about it before. He talked about the velocity of money. But I think I was reading an article, a Kenyan article the other day, and someone mentioned the velocity of money. And it's important just to understand. So maybe additional stuff, you can go look at it. Go look at what velocity of money. I hear someone asking Mike who? Mike Maloney. Okay, Mike Maloney. So check him out. Read his book. His book is what gave me the basis for understanding markets in general. His book is called he's called Mike Maloney here. So you can check him out. Just go check. Here he is, Gold and Silver. He has about 735,000 subscribers. For an old guy like this, those are quite good subscribers. I'm not judging or anything, but for you, if you're a YouTuber, this is a lot. Go watch this series. Please. Since we're here and since Steve Kamau, you've asked, go watch this series. This is episode 1, 2, 3, 4. Trust you me, my friend, you're going to be mind blown and understand where money comes from, who runs the economies. Go watch it. He did a very good series about money, okay? Money versus currency, the hidden secrets of money, the USA 7. Just go watch all this. They're quite nice. I watched them years ago, I think, because you can see these videos for 10 years ago. I watched it about when I was starting out trading, when we were reading. And then his book is free. Okay, so if you go here to his site, just go to his site, Gold and Silver. So I'm just giving you nuggets. Go. If you like reading and you like this added advantage stuff, go check it out. It's goldandsilver.com. It will go to his site. I think all you need to do is sign up on his email or something, and they'll send you a free book. Okay, over here is selling stuff. But go check out his page and get his book. Okay, so velocity of money, if I go back to it, just go read about it. The velocity of money is a measurement of the rate at which money is exchanged in an economy, how fast money moves from your hand to another. Like, let's talk about today. Today, you pandada matatu, you gave money. That same money, Makanga guy, he took it somewhere else. So that's velocity of money. How quick is the money moving in a certain economy? And it's important to follow such data. Why? I'm not really sure. I won't lie to you that I know everything. That's what I'm reading. Okay, I like saying it outrightly. When I don't know. So I'm reading to understand why it's important to follow such, because central bank, CBK, such people normally follow such data. So apart from that, let me answer a few questions before I end. I can see a couple of people have asked questions. Let me start here with the Discord here on Zoom. I can see Raymond, you asked, next time do a lesson on trading psychology. We'll very much appreciate that. No problem. I'll tell Ken to do that. Ken is more of the psychology guy. He has more content on that. I have more content on technicals. Like me, my work is technicals. Ken has a lot on psychology. Taras has a lot on risk management. So that's how tumepeana kazi huku. Everyone has their specialty. So cool. But that doesn't mean we don't know. We still sit down. Taras does research, shares with us risk. I do research, I share about technicals, and Ken does psychology. You were to show us the guy who... Okay, good. I can see Derek, you're following. So for those guys who have another 15 minutes, I'm sure I've taken quite some time. But let's look at the guy who's taken his account from $2,500 to $11 million. So I want to look at that. Before I go on that, I can see some people here on YouTube. I feel motivated when you quote a book. Thank you. Shows one extent. Yeah, thank you. Spot. Yeah, you need to read, man. In this game, I've sat down with many traders, and whenever you talk to a trader, some traders are just new, so it's totally fine. But, and I said this last time, and I've always said it, you normally want to feel, when you're talking to someone who's good at his craft and someone who's gone more than what is needed of him, he's read books, he's talked to people, he's done research, and then you listen to that person, you actually end up just listening to them the whole time. It just flows, and you just want to take in information. But try to talk to someone who doesn't read, doesn't do the extra stuff. It's quite... you don't gain much. So I like doing my part so that I can come and share with you guys my part, because you guys are many and you're following us and you're catching up. So if I don't also move forward, you'll catch up, and that will take us back. I do my journaling when I'm winning, but if I lose, I never feel motivated to do so. That's a good point. I'm sure most of you guys have gone through that. when you're journaling, when you're getting those winning trades, you're journaling, you're clapping for yourself, you're saying this was the best trade. But when you're losing, you try and actually forget about it. You try and throw it away. You try and say, it never happened. Let's not journal. Let's forget the bad moments and wait for the good times to come. I used to be there, did that, and this is where my psychologist helped, because I'm not immune to it. Sometimes I'll be like, I didn't like that trade. Sometimes, especially, okay, that happens to me when I don't follow my trading plan. When I don't follow my plan and I start trading crazily, I don't want to journal because I'm guilty. I hope you get my point. You become guilty and you're like, I'm not touching the markets. I don't want to look at it. But when you follow the plan, when I follow the plan like I did with my previous trades and I lost, I go and journal it and I learn from it. The lessons I learn is a lot. So that's another thing you can check out. If it can be a signal to you, such that when you're not journaling is when you're not following your trading plan. But when you follow your trading plan, even if it's a loss, you'll end up journaling it because you did your part and it's normal. So yeah. So before I answer the rest, let me show you the guy who turned $2,500 to $11 million in 5 years. Okay. So some people might be saying, this guy's taking years. Okay. So give me 1 sec. Let me look for his, it's on my FX book. Let me just log in. Then I share my screen so that it doesn't show those stuff here. One sec. Okay. Let me just, here we go. Okay. Let me show you this guy. You will be blown out of your seats. Okay, just 1 sec. It's taking me out again. Poleni. Sign with Gmail. Caleb. Yeah, there we go. Portfolio. Watch Lux. Okay, so let me share my screen. 1 sec. Here we go. So can you see my screen? Here we go. So search my FX book. If you don't have my FX book, open link site and come to my FX book. You'll get this site. You'll automatically come on home. So if you want to find this guy, so let me give you I wanted to do a YouTube video and I'll do it on this guy. And I know I've promised a lot of videos, but I'll do them. My FX book will open you here. Come to systems, most popular. Come here to most popular. Then you'll get these people. It tracks the most popular systems, the guys who are just profitable. So it's here. So if you come here, you'll find Lux number 8, okay, on most popular systems. Can you see my screen? Sorry, I think it's stuck somewhere. Wait, let's just do that sharing again. Share. Come here, desktop. Can you see? Okay, cool. So Poleni, if you aren't seeing, anyway, let me just do it again, one quick one. My FX book, it will bring you on home. This is by default. So if you want to search for this guy, so my FX book tracks good traders. They're here. So if you come here to systems, come and press popular, okay, most popular. If you come to most popular, it will give you like the top 10 most followed guys, okay? So here 3,000 people are tracking this one, 1,000. Now for me, I try and come and filter. I want to look for someone who's not really automated because these are basically using robots and computers. I want to look for someone who's mixed or someone who's manual. Now finding manual people is very hard, but you can also find them. But most you'll find automated. Now Lux uses both, okay? Lux uses both mixed and automated. I mean, manual and automated. So that's why he's in between. So if you come and click on him, now look at this. I'll show you how he was able to grow his account. Look at this track record since 2019. Okay. Look at that consistency of returns and profit. That's what you want to be looking for. That's the type of trading you want to build. Yeah. And trust you me, this guy's never doubled his money in a month. Okay, so if I show you his track record since 2019, look at this. Look at that consistency. 16%, 13%, 17, 25%, 15. So there's no month you're seeing here 100% return. There's no those crazy, outrageous ambitious returns. It's possible. It's not impossible, but that's not the case. Okay. So look at this. Look at that consistent returns on a month-to-month basis. That's 2019. Look at 2020. Times became quite volatile, so risk management was very high. That's why you're seeing some reduced returns here. Okay. It was COVID time, so makes sense. Okay. But look at 2021. Came back 8%, 4%, 11, 16. 16 was his highest. Okay. Look at 2022 last year. Look at that beautiful track record. Okay. 13, 6, 12. Look at that return. Okay. And look at 2023. 7%, 9, 10, 3%, 10%. Okay. Now someone might be saying, but that's little money. I want to grow and double my money now. Let me show you the history, because you've been asking, how did you turn that money into all that? So if I come here, go to history, go to the last page. Okay. This was back in 2019 here. This February 2019 here. February 2019 is when he put his first deposit. Okay. Of how much? $2,300. Okay. First trade, he made 10%, then made 3%, then lost 2.5%, then made 2.5%. So already from this page, you can see that his winners were more than his losses. He had worked on his trading skill already. Okay. So this is not a new trader. So you can see on this page, he only lost about 3 trades, and the rest were winners. You can see 10%, 5% return. Now, what is of importance is look at this 3%. How much was 3% of his account profit? $98. How much was 11% to $80? Okay. How much was 2% return? $66. How much was 2.5% return? $68. So you're getting that. Okay. How much was 2% loss? $64. So you can see how slowly you're just growing your account. You're making $33, which is 1% return. Okay. Just consistently. If you come to the next page, you're seeing that that's the same thing. 7%, $200. Now what started happening from there? He put another deposit of $800 and something. Okay. So he opened sort of his fund to outside investors, so people could invest with him. Now look at how his track record started growing. He started making 4%, which is now $600. Okay. Look at a 1% return is about $280. So money has started increasing. Now fast forward to today. Now you can go and look at page 107, page 106. Fast forward to today. Okay. Look at one of his trades. He made 3.62%, and that's $378,000 with a lot size of $1,000. I'm sure most of you have never even gone past $1 lot size. Okay, look at that return, $378,000. How long did he stay in this trade? Less than 2 hours, and he made about 50 million Kenya shillings. Now that's the power of trading. Okay, that's what trading is all about. That's the goal. That's where we want to go to. Where you're just making a 3% return. This guy hasn't made that he 100, he's doubled his account. No. 3% return, he's making this amount. Okay, so that's how he's able to turn his account from $2,000 to now he has a balance of $11,900. He's about to hit 12. Let's round it off. He's at $12 million. Okay. The profit alone he's made from this market is $9.5 million. If you take that into Kenya shillings, okay, how much is that in Kenya shillings? At about 1.4 billion Kenya shillings in profit. This year alone, he's made $4.4 million. This month alone, he's made $1.1 million, which is about 150 million Kenya shillings. So that's the power of trading. Okay, that's where we want to go. That's why we never sell the dream for double your money, grow your money, start with a $10 account. No. Start with a good substantial account and grow that account consistently. Okay, but at the same time, we've paid attention to his ups. Let's look at his downs as well. The times he loses money. Look, when he loses 3% as well, he loses $360,000. That's 50 million loss in one trade. So you need to go growing your mind, your mental capacity to handle such big numbers. When you start out, it's very hard, but with time, it gets not easier, but simpler. Okay, so go check him out. Go check his page. Click on the month. Look at the pairs he's trading: gold, Aussie dollar, GBP, USD. Yeah, go check him out, track him, and just look at how he's trading, how he's performing, and look at that track record. He's made a $10,000% return in the past 5 years. Quite substantial. That's gain, but absolute gain is about 200 percent, which is quite good. But anyway, that was on an added advantage for you guys to check it out. So go look at him. Also, at the same time, look at him. He's not over trading in the past 5 years. He's only taken about 350 trades. Look at his winning percentage, 68%, 68%. I'll do a video on this one. I'll break this down and just show you the important things you need to look at. What is profit factor? What is wins? Look at the commissions he's also paid his broker. 500,000. This is when I was telling you guys. Remember when I started the video and I was saying charges add up when you have bigger accounts? This is what I was talking about. He's grown his account to $11 million, but he's paid his broker $500,000, which is about 60 plus million Kenya shillings. Anyway, I think I've done you justice on that one. I can see guys over here saluting. I can see Victor Rich saying 1.4 billion Kenya shillings in profit. Victor, this industry is huge. You're going to see, we hopefully will get there. Hopefully you guys will get there. Like what people are showing is not even a scope, a tip of the iceberg of what is happening out here. People are making mad money. Slow but sure. That, just like Abdishakur said. Abdishakur Ali, slow but sure. Big Mikey, I can see you agree to that. So guys, allow me to end it there today. I've taken 1 hour, 30 minutes to give you nuggets from us. That's what I like. Let's talk. I like when you talk about deep stuff, look at markets differently. It's not all about analyzing and just looking at a buy, sell, buy, sell. You have to balance the two. So that's it from me today. Hope you've enjoyed that analysis. If you want me to do those videos I've talked about, the journaling, I do a deeper breakdown about Lux and how you can follow him and how you can track such profitable traders. Let me know when I can do that. I can see Big Mike is saying Illuminati kind of money. Yeah, see Wongo. Mi niko sure hapa tukianza kutrade profitably, guys watasema ni wash, ni Illuminati. We've already seen those days coming. It is what it is, and we'll refer back to this video. If you guys can remember it in future, refer me back to this video. So, it is what it is, but allow me to end it there. And the next people who are coming, I can see Serena there laughing. Let me not talk too much. Let me just say, traders are going to be the next big things. Right now you're seeing developers, coders making money. Trust me, those guys are making peanuts. Those are nothing. The amount of money traders can be able to make out of trading and what you've seen here is very, very possible. But that's it from me, guys. Hasta la vista. See you guys soon. Sayonara. Kwaheri ya kuonana. Goodbye. I'll see you guys soon. So give us an insight of your classes. Raymond, good question. Let me just answer that before I end. So our classes, it's a 2-month course. You get a session with the students. You're grouped in about a class of 5, maybe 3 to 5 minimum. But we try and put as much people so that we can create a community and guys to know one another. So that's how the course goes. We take you from a novice level to a professional advanced level. That's our goal with trading. So that when you come with us, we are the end goal. You don't start looking. We've had many people coming and they're saying they came from another school, they weren't taught the right thing. We try and give you that whole package in one place. So we teach you from basics to advanced to strategies to risk management, psychology, and all that. And then when we have trading prop firms challenges, we also push for people to do them, motivate you guys. We want to start doing more hangouts and such stuff, but that's exclusively to our students. I'll talk about that much more. Visit our office. You can always tell you much. Let me not take too much time. Nimechoka, guys. Mnielewe. It's an amazing day. Amazing content. Where will this live be posted? It's already on YouTube. It'll just stay on YouTube. So you can check it out on the live sections. How about the fee for intermediates? We don't really have that for now. I won't lie. We just have a full course. We don't have anything that takes you from katikati to end. We just do the full course. So, thank you for your support, guys. Some guys are very consistent here as well. As much as we're consistent, also most of you guys are consistent here. And I appreciate it. I love it. Also on YouTube, I can see guys are there. So shout out to all of you guys on YouTube, on Facebook, on Zoom. So that's it from me. And I'll see you guys. Mob love. See you soon. Peace. My name is Caleb Sam. You're at Financial Hub Forex Academy. We train people on how to trade in the financial markets.
Trading is all about trying to get a reward from the markets. But at the same time, you need to understand that there is some high level of risk.
If you're told that you're going to make money fast, run away and run away as fast as possible. As you come into this market, I tell you, have an open mind, be willing to learn, do your own research, consult the right people, and give yourself time.